Welcome back to our deep dive. We've been exploring robbit.ai, and it's pretty fascinating stuff.
Yeah, this company using AI to create more efficient and transparent versions of these traditional mutual funds, it's pretty wild.
Using ETFs to do it.
Right, right. And we've already seen some pretty compelling examples of how those ETFs, as they call them, are often outperforming the original funds, even the ones with, 4 or 5-star Morningstar ratings.
It's really interesting to see.
Yeah, it's making me rethink my whole approach, honestly.
It's a healthy dose of skepticism to bring to the table, for sure.
Yeah.
Especially when it comes to investing.
Yeah.
And that's what I think robbit.ai is encouraging us to do.
Yeah.
They're not saying throw out everything,
Right.
but they're saying, let's look at this from a different angle.
Yeah.
Let's use data. Let's use AI. Let's really get a deeper understanding.
Okay, so more examples. I'm ready to see what else this AI can do.
Absolutely. Let's dive in. Let's explore Vanguard Inflation-Protected Securities.
Okay.
Ticker symbol VIPSX.
VIPSX. Okay.
As the name suggests, this fund invests in TIPS.
TIPS.
Or Treasury Inflation-Protected Securities, and Morningstar gives this fund a 4-star rating.
Okay, so bonds that are meant to protect you from inflation.
Exactly.
Essential these days.
Yeah.
So what did the ETF reveal about how this fund is actually run?
Well, the ETF for VIPSX is 100% allocated to TIP, the ETF that tracks those same inflation-protected securities.
Oh, interesting. So it's like a direct match.
Pretty straightforward, yeah.
Okay, makes sense. I mean, it's a pretty specific goal.
All right.
So how did the performance compare, the fund versus the ETF?
Both VIPSX and its ETF counterpart had a return of about 24%.
Oh, so they're the same.
Basically, yeah.
Okay, so I guess it's not always about outperforming.
You got it.
Sometimes it's about finding the most, efficient way to get to the same place.
Exactly.
Huh, okay, that's interesting.
And, in some cases, that might mean matching the performance of a really well-established fund.
Yeah.
And in other cases, as we've seen, the ETF might uncover opportunities for improvement.
Yeah, I like that. It's a very nuanced perspective.
It is.
It's not just blindly chasing returns.
Yeah.
It's about understanding how these funds work and maybe finding better ways to achieve our goals.
Exactly.
Okay, let's look at another example.
All right, let's shift gears to a fund with a more growth-oriented approach.
Okay.
FPA Crescent, ticker symbol FPACCX.
FPACCX. Okay.
This one falls into the U.S. Growth Balanced Allocation category.
Okay.
And it's got a 4-star rating from Morningstar.
So a mix of growth stocks and then a more conservative allocation to balance things out.
Precisely.
Okay, what does the ETF look like for this one?
This one's a bit more diverse than the previous example.
All right.
Includes ETFs like XLY for consumer discretionary, IEV for European stocks, IYR for real estate, and a sprinkling of kind of various sector-specific ETFs like XLB for materials and XLF for financials.
Okay, so it's capturing that growth balanced approach with stocks from all these different sectors and a bit of real estate too.
Right.
How do they perform?
Well, FPACX delivered a return of approximately 115%, while its ETF counterpart achieved a slightly higher return of about 116%.
Again, really close.
Very close, yeah.
So it seems like this AI is good at replicating a whole bunch of different strategies.
It does seem that way.
From that, conservative inflation protection to a more growth-focused approach. Okay, I'm ready for another one.
All right, let's dive into another balanced fund, Fidelity 4-in-1 Index, ticker symbol FFNOX.
FFNOX.
Okay, this one also falls into that, U.S. Growth Balanced Allocation category, but takes a slightly different approach. Morningstar gives it a 3-star rating.
Interesting. Okay, let's see what the ETF says about it.
So the ETF constructed to replicate FFNOX
Yeah.
includes a mix of SPY for U.S. stocks, IEV for European stocks, IEF for U.S. Treasury bonds, and EMB for emerging market bonds.
Oh, wow. Okay, so it's capturing that growth-balanced approach with U.S. and international stocks and then bonds, both U.S. and emerging markets.
Exactly, a pretty global perspective.
Yeah, it really is.
And when we compare performance, FFNOX generated a return of roughly 121%.
Okay.
The ETF, mimicking its strategy, achieved a significantly higher return of around 165%.
Wow. Okay, that's a pretty big difference.
Yeah, it is.
It seems like the AI found some efficiencies that weren't in the original, even though they're both doing the same basic thing.
That's one of the really compelling things about this tech.
Yeah.
It can uncover, hidden value, even in strategies that have been around for a while.
This is seriously making me think that maybe we give too much credit to those star fund managers.
Interesting thought.
Like maybe AI can not only replicate what they're doing, but actually do it better.
It's a fascinating question, isn't it?
Yeah.
The role of the fund manager in like this age of AI, it's definitely changing.
Yeah, it's definitely something to think about.
But let's not get too ahead of ourselves.
Right. Back to the data.
Back to the data, we got more funds to explore.
Okay, what's next?
Let's venture into the world of international investing. With Vanguard Total International Stock ETF, ticker symbol VXUS.
VXUS.
Okay. Remember, even though it's an ETF, robbit.ai can still analyze and replicate its strategy. Morningstar gives this ETF a 4-star rating.
And this one is International Large Cap Blend Equities, so big companies outside the U.S.
Precisely. And the ETF designed to replicate VXUS, it's pretty diverse.
Like what's in it?
It includes ETFs like IEV, EWJ for Japanese stocks, EEM for emerging markets, and BWO, another emerging market ETF.
Whoa. Okay, that's a lot of different countries in there.
A truly global perspective.
Yeah, it really is.
So when we compare the performance, VXUS generated a return of approximately 59%,
Okay.
while the ETF delivered a significantly higher return of around 154%.
Okay, that's a huge difference.
It is.
It's like when it comes to those international markets, the AI really has an edge.
Yeah, possibly. You know, the AI's ability to just process tons of data and find patterns.
Yeah.
It might be perfect for this, like, global investment landscape.
This is making me rethink my whole approach to international investment.
It's interesting stuff, isn't it?
It is. Let's look at another example.
Okay, let's shift back to the U.S.
Okay.
With T. Rowe Price Capital Appreciation, ticker symbol PRWCX.
PRWCX. Okay.
This falls into the U.S. Balanced Allocation category. Has a 3-star rating from Morningstar.
So another like mix of stocks and bonds for a more conservative approach.
Exactly. And the ETF designed to replicate PRWCX, it includes SPY, IEV for European stocks, IWR for water resources, and EWG for Germany.
Okay, interesting. It's like U.S. and international stocks, a little bit of water, which is like essential.
Yeah, a pretty well-rounded approach.
It is. So how did the performance shake out?
Well, PRWCX generated a return of approximately 191%,
Okay.
while the ETF achieved a higher return, roughly 223%.
Again, the ETF outperforms even a fund with a, decent Morningstar rating.
It seems like regardless of the fund's strategy or rating, the AI is consistently finding ways to achieve, similar or better results.
Yeah, it's almost like robbit.ai is saying, hey, we're not here to like completely replace humans,
Right.
but we are here to challenge them, push the boundaries a bit.
Yeah, I like that.
I think that message is like resonating with a lot of investors.
I think you're right.
I know it is with me. What other funds did you analyze? What else did you find interesting?
Okay, let's explore Vanguard Capital Opportunity.
Okay.
Ticker symbol VHCOX.
VHOX.
Okay. This fund focuses on U.S. large cap growth equity.
Okay.
And has a 5-star rating from Morningstar.
So big companies with like high growth potential.
Right. And the ETF designed to replicate VHDOX, it includes SPY, XLK for technology, XLY for consumer discretionary, and IYR for real estate.
Okay, so it's capturing that growth focus with like tech, consumer spending, and real estate.
Exactly. And when we compare the performance, VHDOX generated a return of roughly 248%.
Whoa, that's a lot.
It is, but its ETF achieved a slightly lower return of about 210%.
Oh, interesting. So this is one of the few where the original fund actually did better.
It is, yeah. It's important to remember that AI isn't perfect.
Right.
There will be times when a human manager can beat the algorithm.
Especially maybe with those really concentrated portfolios.
Yeah, that's a good point.
So it's not about like getting rid of human judgment.
Yeah.
It's about, making it better.
I couldn't agree more.
Okay. What other funds did you find interesting to analyze?
Let's take a look at Selected American Shares, ticker symbol SLSSX.
SLSX, all right.
This fund falls into the U.S. Large Cap Blend Equity category
Okay.
and boasts a 5-star rating from Morningstar.
Back to those big companies.
Yeah.
With a mix of, value and growth.
Exactly. And the ETF designed to replicate SLAX includes SPY, XLY for consumer discretionary, XLF for financials, and GLD for gold.
Oh, okay. So it's got a bit of everything in there.
Yeah, blend of large cap stocks, consumer spending, and a bit of that like safe haven asset, gold.
Yeah, it makes sense. How did the performance compare?
So SLX generated a return of approximately 171%.
Sorry.
The ETF, on the other hand, achieved a higher return of around 194%.
Another case where the ETF wins, even with a 5-star rating.
It is, yeah.
This is making me realize that maybe we've been too quick to, like, dismiss AI in investing.
I think you're right. There's this tendency to think of AI as like this futuristic concept that's still years away.
Yeah.
But the truth is, it's already here, and it's changing how we invest.
Okay, I'm ready for the next fund.
All right, let's delve into a kind of value-focused fund. Oakmark Select Investor, ticker symbol OAKLX.
OAKLX.
This one targets U.S. large-cap value equity, holds a 4-star rating from Morningstar.
Okay.
Known for its concentrated portfolio.
Concentrated meaning?
Meaning it invests in a relatively small number of companies that the managers believe are, like, significantly undervalued.
Which can lead to, like, big wins, but also more risk.
Exactly. Now, the ETF designed to replicate OAKLX. It's a bit more diverse in its composition.
Okay, so what's in it?
Includes ETFs like XLY for consumer discretionary, XLF for financials, EWU for UK stocks, and EWG for Germany.
So it's capturing that, like, value focus, but also diversifying across different areas.
Precisely. And when we compare performance, OAKLX generated a return of approximately 133%.
Okay.
The ETF, on the other hand, achieved a slightly lower return of around 106%.
Okay, so this is another one where the original mutual fund actually did better.
It is.
I'm noticing a trend here. It seems like the AI has a tougher time with those concentrated portfolios.
That's a good observation.
Yeah.
It highlights the fact that, AI isn't a magic bullet.
Right.
There are situations where a human's, like, expertise and intuition can still win out.
Especially in those, like, niche or specialized areas.
Exactly.
It's good to remember that there's no, like, one-size-fits-all approach to investing.
Very true.
Okay, what other funds did you look at?
Let's examine PIMCO, Total Return Institutional, ticker symbol PTTRX.
PTTRX.
Okay, this fund focuses on U.S. intermediate-term bonds with a goal of total return.
Okay.
Morningstar has awarded it a 3-star rating.
So bonds with, like, a medium-term maturity. They're aiming for both interest income and, like, potential price appreciation.
Exactly. So the ETF designed to replicate PTTRX, it's 100% allocated to IEF, which tracks U.S. Treasury bonds.
So, again, mirroring that focus on, like, those core U.S. government bonds.
Precisely.
Okay, how did those two stack up?
PTTRX delivered a return of about 19%.
Yeah, okay.
And the ETFs, mimicking its strategy, achieved a very slightly higher return, also around 19%.
So basically the same.
Essentially, yeah.
Okay, so the AI-powered ETF pretty much matched the performance of the original bond fund.
Right, and it shows that robbit.ai system isn't always about beating the market.
Right.
It's about finding the best, most efficient way to, copy a fund's strategy.
Whatever that strategy might be.
Whatever it might be.
Okay, I'm seeing the bigger picture here. It's not about just blindly chasing returns.
Yeah.
It's about understanding how these funds are actually being run.
Right.
And maybe finding more efficient ways to get similar or even better results.
Exactly. And it's about empowering investors with, more knowledge.
Yeah.
More options.
Yeah, okay, let's look at one more fund.
Okay, sounds good. Let's analyze Vangbel INDINS, also known as Vanguard Balanced Index Fund, with ticker symbol VBAIX.
VBAIX, all right.
This falls into the balanced index category.
Okay.
Meaning it's designed to, track a specific benchmark.
Right.
That includes a mix of stocks and bonds.
Okay, what's the ETF for this one look like?
It's mainly made up of SPY for U.S. stocks, IEF for U.S. Treasury bonds, and LQD for investment-grade corporate bonds.
So it's basically mirroring that, balanced index approach.
Yeah, with a blend of, those core stock and bond ETFs.
Okay, and the performance comparison?
VBAX delivered a return of approximately 128%.
Not bad.
And the ETF achieved a higher return of about 177%, and Morningstar gives VBAX a 4-star rating.
Okay, so even when it's tracking a benchmark, the AI can still find ways to do better.
Yeah, it's interesting, isn't it?
It is. It suggests that even in, passive investing, there might be room for improvement.
Potentially, yeah.
This is really making me rethink everything I thought I knew about, active versus passive. It's wild.
It's a lot to process.
It is. Okay, what's our last fund?
Okay, let's explore T. Rowe Price Balanced Allocation Fund, ticker symbol RPBX.
RPBAX.
Okay, this fund falls into the U.S. Balanced Allocation category, similar to a few we've discussed.
Right, another mix of stocks and bonds.
Exactly.
What's the ETF? Tell us about this one's strategy.
So the ETF replicating RPBX, it includes SPY, IEF for U.S. Treasury bonds, HYD for high-yield bonds, and EMBAX B for emerging market bonds.
Okay, so it's like stocks, treasuries, and then some potentially riskier bonds in there.
Right, a blend of, different levels of risk.
Okay, and how did the performance compare?
RPBAX generated a return of approximately 100%.
Okay.
While the ETIP achieved a slightly higher return of around 118%. And Morningstar gives RPBAX a 4-star rating.
Okay, so another case where the ETF does better, even compared to like a well-regarded fund.
It is, yeah.
This is really making me wonder if those Morningstar ratings are like telling the whole story.
That's the key takeaway here.
Yeah.
Morningstar ratings, they have their place,
Yeah.
but they're just one piece of the puzzle.
Right.
robbit-ai is bringing like a whole new perspective,
Yeah.
a more data-driven, objective perspective on these mutual fund strategies.
And it's clear that like their AI-driven approach is really shaking things up.
It is, absolutely. Their ETIFs are offering a more transparent, more data-driven way to like copy the strategies of even the top-rated funds.
Yeah.
And it's not just about beating the market, it's about using data and technology to help investors.
Right, giving them more control over their investments.
Exactly.
This has been a like seriously eye-opening deep dive.
Good. I'm glad.
I'm already thinking differently about like how I approach investing. It's been great.
Well, we'll delve into some more of those possibilities in part 3 of our deep dive.
Perfect. Can't wait.
All right.
All right. So welcome back. We've spent the last 2 parts of this deep dive really getting into the nitty gritty of mutual funds and how AI is changing the game.
Yeah. A lot of interesting stuff there.
It really is. I mean, we uncovered some pretty fascinating insights, I think.
We did. Yeah. From those Morningstar ratings and their, limitations to the potential of these ETIFs, outperform even those really highly rated funds.
It's made me question everything I thought I knew about like picking mutual funds. Seriously.
Well, that's a good thing. It's all about, challenging those assumptions.
Yeah.
And finding new ways to make better decisions.
Speaking of better decisions, I'm really curious to hear what you think about balanced funds.
Okay.
They seem to be getting more and more popular.
Yeah, they are.
What makes them stand out, and how does all this robbit.ai tech play into that?
Well, balanced funds are interesting because they try to, provide that mix of stocks and bonds in a single portfolio so you can manage risk and hopefully achieve that long-term growth.
Right. It's like a one-stop shop for people who want diversification
Exactly.
without having to pick every single stock and bond themselves.
Exactly. A pre-packaged investment mix tailored for a specific level of risk and return.
Right. Okay.
And as we've seen with robbit.ai, even those prepackaged strategies, they can be analyzed and potentially improved upon.
Yeah. Remember that Vanguard Wellesley Income Fund, VWIIX?
Yeah.
The ETF for that one actually crushed the original fund.
Yeah, it did by a pretty significant margin.
It makes you wonder if AI is the key to making even better balanced funds in the future.
That's a really interesting thought, and it's not as futuristic as it sounds,
Right.
We also looked at those T. Rowe Price Balance funds, remember?
Yeah.
T. Rowe Price Capital Appreciation, PRWCX, and T. Rowe Price Balance Allocation, RPBAX.
Yeah.
In both cases, the ETIFs actually beat the original funds. It shows the potential for AI to, enhance even those well-established approaches.
Imagine if you could tell an AI what your goals are, your risk tolerance, your time horizon, and it could just create a personalized portfolio of ETFs just for you.
That's the dream, right?
It would be like a robo-advisor.
Yeah.
But way more sophisticated.
Exactly. And I think as AI keeps evolving, we're going to see more and more of those personalized tools becoming available.
Yeah.
It's going to, democratize access to that professional level investment management.
That's really cool. So to kind of wrap things up here.
Yeah.
We've learned that just relying on those Morningstar ratings can be a bit, misleading.
Yeah.
It's like navigating by the stars. You might get somewhere, but it might not be the best way.
Right.
And we've seen how robbit.ai is using AI to challenge the status quo.
Yeah.
With those ETFs and offering a more transparent, data-driven way to invest.
It's an exciting time to be an investor, that's for sure.
It is. Technology is opening up all these new possibilities.
And giving us more control.
Yeah, exactly. This has been a super eye-opening deep dive.
Good. I'm glad.
I'm already thinking about investing in a totally different way. So thanks for, taking the time to walk through all this with me.
Absolutely. My pleasure.
This is just the beginning of the AI revolution in investing. I can't wait to see what happens next.
Me too.
Thanks for joining us for this deep dive. And until next time, happy investing.